Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for December 17th, 2023. We're almost into the full-on holiday season, and I want to wish you all a happy holidays. Before I get into this, I just want to say that, yeah, it may look a little large on screen. Don't worry, I'll be making myself disappear here very shortly. I just wanted to say a few things, though. First of all, I want to say thank you for sticking through here this whole year, watching the videos from Forex Analytics, our team, our shows, whether it's the Face Show, the Flow Show, for those of you that are Forex Analytics subscribers, watching the Daily Roundup, the Morning Edge, and just being in our community. I really do appreciate you, and thanks again, and happy holidays to you and your family. Now, because we're in the holiday season, I also want to say that liquidity in the markets is going to start to get pretty poor. You can already starting to see the flow moving the market, and bids are kind of disappearing, offers are disappearing. And so what that should suggest to you is a couple of different things. My position sizing, me personally, my position sizing is a lot smaller now than it normally is throughout the course of the normal trading year. That's just because the markets can move pretty quick. Sometimes liquidity, just lack of liquidity, can move the markets really quick, and you don't want that to go against you. You might be thinking, well, I can make great money that way. Yeah, you can lose a lot too if you have your position size too big. So please manage your positions accordingly. Keep your stops in place, and because you don't want to ruin your year just at the last week or two of the year. That's not very good. It'll leave you with a bad taste at the end of the year. So trade carefully. Be careful of the lack of liquidity. Tone down your position size and try not to get in the way of the markets. If the markets look like they're trending in one direction, either get on the trend or get out of the way. And I think that's going to be the case for a lot of the markets that we're going to look at here today, or on the week ahead video. So anyway, without further ado, I want to say thank you again. Let's get into the markets, and let's start really quick before I even get in the charts. Let's talk a little bit about the stock market. It is at the highs of the year. We're going to be looking at the S&P, and we're going to be looking at some of the other different markets as well. But we have to be respectful of the fact that the Fed chair came out this last week, even though there was some pushback from some of the other regional Fed governors. Fed Chair Powell came out pretty dovish, and that has given the stock market a Christmas kick, or a Santa kick, if you will, here at the end of the year. So be respectful of the fact that the stock market is breaking out to new highs on the year. We'll take a look and see how far it can go. But yeah, it's been a really interesting week with all the central banks we talked about last week, and we'll be going into a lot of those pairs as we get through this. So let's go ahead and do that, and I'm going to get myself off of the screen here, and let's discuss. Well, first of all, with Forex Analytics, you get this like data flash, and it pops up here automatically. But I'm going to go ahead and remove it. You can find that in the calendar tab, next to Live Squawk, the Live Squawk feed that you see here. I'm not going to use the live charts here because I'm going to use the ones that we use each and every week. And, let's start off with Monday, because I think it's important that we look at the euro, because the euro did find obviously some really, really key support last week. But you could argue that we found some pretty key resistance last week at the 110 level. Now, I'm going to highlight this because I know what a lot of you are thinking is double top. Yes, we should just call it key resistance right now. Double top, a little early to be calling that. The one thing that we have to be thinking of is the ECB. It was not dovish. It was actually more of a hawkish hike. And, the FOMC was it was a hawkish hold, and we had out of the FOMC a dovish hold. So because of that, expectations have shifted, and that's why the euro is trading up, or has traded up near the 110 level. But going into Monday, we have the German IFO data coming out. And the reason why that's key is because the IFO data has been below 90 since the summer, but it's not quite as low as the levels that we got back in October of 2022. See, the German, business sentiment number, the IFO number, is going to be really important because, you can see what's happening with the German DAX as we rallied to all-time highs. I did blog about that this week. But more importantly is if that IFO number is not as bad or comes in a little bit better than expected, you might see the euro lift off, some of these levels here. It might press back towards the 109.50, 110 level. That's going to be on Monday. Monday night, we have the RBA meeting minutes. Now, we talked about last week the Aussie getting above the 66.30 level, the 618 retracement that we trade higher. That's what that arrow was drawn from last week. So if the meeting minutes come in hawkish, then there is a risk that the Aussie trades back up towards 68 cents. Now, the one thing that you have to be thinking about is if we do break 68 cents, which it'll be, you can see the 78% retracement. We got this, pretty minor trend line. I say it's a minor trend line because it's not perfectly drawn through all of the highs. You can see we've gone through some wicks because this is more of a weekly chart that we were looking at. But you can see that trend line, it's going to be pretty critical. And we break through that 68 cents with stocks rallying here at the end of the year. You might get the Aussie dollar continuing to goose higher. And, a lot of people are very bullish to Aussie. And I think while we're above 66.30, we need to maintain that somewhat bullish stance as well, because we're above that 618 retracement. You can see how we held the 200 DMA pretty well. So nice consolidation around 200 DMA, rally. We get hawkish RBA meeting minutes on Monday night, which is actually Tuesday morning in Australia. Then that's going to be a big one. Now, you know what's going to be a big one is we're going to have the BOJ coming up Monday night, and that is going to be Monday night, Tuesday morning in Japan. Now, the BOJ typically when they have their decision, it's around noon Tokyo time, roughly, give or take 30 or 45 minutes, somewhere around there. I wish it was at a set time. We all do, but it isn't. You remember last week, one of our setups was short dollar yen up at 146. Well, that worked out pretty well. So we'll delete that for now. We're going to delete. These are all the drawings from last week. You guys probably remember them all. But this is questionable now because we have the BOJ, and a lot of people think the BOJ might lay out the foundation for, a move on monetary policy the first quarter of this next year. Now, I'm not expecting a lot of fireworks this BOJ meeting because it's so close to the holidays, and the BOJ is very well aware. Between the BOJ and the Ministry of Finance, they do a lot of, obviously, intervention in the markets. They understand the markets really well. They understand how markets operate, and they know that liquidity is really poor. So it would be foolish of them to be making some major policy announcements a couple of days before the Christmas holiday, knowing that the lack of liquidity is there. So I'm not expecting big fireworks on Tuesday morning or Monday night. But do you think I'm going to be in front of the computer Monday night? Yeah, even though I physically, I'm just telling you personally, if you guys are in our Forex analytics chat rooms, for those of you that trade in our chat rooms and are in there all the time, these chat rooms, I'll just show you real quick. You can see it real quick. These are the chat rooms. If you're in our chat rooms and you're discussing markets, you might not actually see me on Monday night because I actually have something I have to be at, or an event I have to be at on Monday night. But that doesn't mean I won't have my mobile device with me. So because there is always that outside risk that we could see some sort of move there. All right, now let's continue on with what's happening throughout the course of the week. So on Tuesday, we have, let me get over to the dollar Canadian. The dollar Canadian has really slumped, and we have Canadian CPI, and that's going to be on Tuesday. And if the inflation data is stronger than expected, we could expect the dollar Canadian to continue to slip towards the 78% retracement. Now, why is that possible? Well, it's possible that, with a strong Canadian CPI beat, we could actually see continued Canadian dollar strength because people would think that another hike might be coming from the Bank of Canada. Right now, the Bank of Canada is that 50-50, whether they or won't they. Well, obviously, if inflation continues to be strong, then you might see a move like that down to the 132.75 level. Now, the flip side is you see this false breakout or breakdown here. If we get back above the 618 retracement, which would be 134 and change, we're probably going to make a rally back towards the 200 DMA. And so I'm going to just say that this level that we're at is very pivotal ahead of Tuesday's Canadian inflation data. Okay. You know who else has inflation data? On Wednesday morning, we have UK inflation. Now, we talked about the cable getting below the 200-day DMA, it would be bearish. Now, obviously, what happened with the sterling, what happened with the euro this week was, and what happened with the dollar this week was pretty amazing, right? We saw this massive rally in the sterling, in euros. I think the Fed chair obviously surprised everybody because, he was as dovish as he was. And obviously the sterling, made that move higher. Notice that we had a divergent relative strength this last week as we moved to new highs. You know what that means? Well, that means that this support that you see here is more important than ever. Let me get rid of this old fib level because we don't need it for now. What you can see here is the 38% retracement. And let me go ahead and grab the drawing tool here. That is the bottom of this zone that we've highlighted before because we know it's important over here and over here, right? The bottom of that zone and those lows come in right at 125. That is the 38% retracement. What that tells us is in the event we break through 125, not only are we breaking the 38% retracement, but we'll be breaking a trend line and we'll be breaking the 200 DMA. So what I would be thinking this week is if the sterling got back towards 125, it probably gives you a good risk reward to be on the long side. The flip side of that is if we break through 125, it's going to be a very bearish event for sterling. Now, I want to also tell you that at the end of this video, as you all know, I go through my best setups of this next week. I go through the setups from last week, so I review those. You can always skip forward if you want to go check those out. But the reason why I bring that up is because something regarding the sterling is going to make an appearance at the end of this video, which I think is going to be very important, and it'll probably coincide with what you're seeing here on the pound dollar. So make sure you all stick around. All right. On Wednesday, we have the U.S. consumer confidence. We have existing home sales. I don't really care about existing home sales. I expect existing home sales to continue to drift lower, especially with mortgage rates where they are. You really got to get mortgage rates back in the 5.5, just a 5 handle on a 30-year loan. Now, I don't know when or if that's going to happen, but I would say that if we saw 30-year mortgage rates back in the 5 handle level, you're going to start to see existing home sales tick up again. But for right now, just expect the data to continue to drift lower. Now, what also we're going to be paying attention to is UK. I'm sorry, I didn't mean to do that. Is we're going to be paying attention to U.S. consumer confidence. Why did I flip off let me find the dollar index again. I just had it off to the right, but I don't know why I just skipped over it. Oh, there it is. Okay. So we have U.S. consumer confidence numbers. Now, notice that the dollar index is in breakdown territory. Now, this is the dollar index I use for our daily face shows. And by the way, if you don't know how to get to the face show, you can just go right to our website. You can see it right here. Just scroll down a little bit and you'll see face here. You can register for that. It's our free show. You won't even see my analysis. You'll see our whole team's analysis there. Matter of fact, Gregor Horvat, I believe, is going to be joining us next week a couple of times on the Face Show, as some of our team members will be taking the week off. So make sure you're here to listen to the Face Show every day, because like I said, it's not just my analysis, it's from the rest of the team as well. But going back to the dollar index, I use this for both, but you can see we got a little bit of a cup and handle pattern. Now we did rally, on Friday back to the, basically the neckline or the breakdown point of the dollar index. I think it's going to be real critical as we go into this week, whether we can sustain this move lower or not. The dollar index, I feel that if we do get to this level, which is a 78% retracement and 161% extension, I believe that is going to be the level where we see some dollar buying come in. But the question is, are we even going to get down there? Well, again, we have U.S. consumer confidence on Wednesday. I was out and about last night, and if you think there's a recession, I'm in probably one of the most sensitive places in the United States to live, where, once we go into recession, you can really see it here. And then, when we're not in a recession, people are out spending money. Well, people are out and about last night at restaurants, that's for sure. So, so we got consumer confidence coming in on Wednesday. Don't bet against the American consumer. However, if it does start to weaken a little bit, we might see a slip. But with inflation coming down, and we've seen headline inflation coming down, it's probably going to bode well for consumer confidence going into Wednesday. So just watch the dollar. I think we're at pretty key levels. Thursday, we do have. I want to share with you the Mexican peso. We have Mexican mid-month CPI. Now, we never got above the 200 DMA. That was a little bit of a bummer for me, and I'll review the dollar Mexican peso a little bit later. But yeah, we didn't get above the 200 DMA. I was just ready and poised to buy this thing here, and no, never made it. Following Mexico last week, Mexico came out and cited inflation, so it allowed for the dollar mex to come down. Now, it doesn't mean that we're not still building a rounded bottom. Very key support, and the dollar mex comes in at 17.05. Take note of that. I'll be back to that later. We also have Norwegian employment. Now, we had this inverted head and shoulder pattern setting up, but guess where we stopped? There. And you know what else happened with this inverted head and shoulder pattern? We stopped at the 618 retracement. Now, if you are a Forex Analytics subscriber or you listen to the Face shows, you knew that we stopped right at the 618 retracement. And then obviously the US dollar Norwegian krona came under a lot of pressure after that. Now, where are we at right now? Well, we're at, in my opinion, pretty critical support. So knowing that where we're at in the US dollar Norwegian krona is pretty key here. You can see that 618, longer term 618 retracement comes in around 1045. And I know what you're thinking. You're like, well, I can get long here as long as it doesn't break down. But keep in mind that Norway employment data, and then Norway also has some other data coming out this week, like retail sales and household consumption and things like that. But Norway is going to have some data coming out this week that could indeed, move the market. Okay, this week and next week. Now, on Thursday, we also have Canadian retail sales. I know we talked about Tuesday, we have the CPI data. I'm not sure the Canadian retail sales is going to be too much of a mover, but just just know that it is on Thursday. Now, the big event for Thursday, in my opinion, is going to be the US GDP data. Now, and then at the same time, you're going to get the weekly unemployment claims. Now, I know GDP data is backward looking. I get it. And I think, everybody gets that it is backward looking. But looking at, that data that's coming out on Thursday, I think is going to be pretty important, because we do have, now let me confirm something. We have not only, let me go ahead and just double check something. Not only GDP unemployment claims. We also have Philly Fed on the 21st. Now, on the 22nd, we're going to have PCE data. So it's going to be a little bit of a primer ahead of the PCE data, but just keep in mind on Thursday we have that US GDP. What else that we're going to see on Thursday with the GDP data is we're going to have their price index as well. So just, it's data that could actually move the market. Now, going into Friday, we're going to have UK retail sales. We already talked about sterling. And most important data of the week, unfortunately, happens to be on Friday, and that's going to be the US PCE data. Now, I'm going to stop really quick, and I want to talk about yields and where we're at. So what you're going to notice here with the 10-year is yields are at the 618 retracement. There's a big debate whether yields can continue to fall, or are they going to stabilize after dropping to these levels, below the 200 DMA? What you're going to notice in the 10-year is we just completed the inverted head and shoulder pattern that we have discussed on several different occasions over the last couple of weeks, if you go back on these week ahead videos. So once you complete a pattern, it doesn't mean a reversal, but once you complete a pattern, you have to be a little bit more careful about, pressing higher, like in this case would be buying the 10-year notes. You have to be a little bit more careful with that because we have just completed. So what we do, whether you're looking at the 10-year yield below the 200 DMA or the 10-year notes, the actual notes themselves at the 618 retracement and above the 200 DMA, is see how we respond on any dip now in the 10-year notes. So just keep that in mind. All right, a couple other things I want to cover before we go into the review portion of this video. Let's talk about the S&P and the equity markets where we're at right now. So obviously the equity markets continue to rally. We hit the 127% extension, or within a couple of points of the 127% extension. What that means to us is now that if we get any dip back down towards the 46, 20, 46, 30 level, we should be very well supported in equities. Now, it's not just the S&P. Let's take a look at the NASDAQ 100. The NASDAQ 100 continues to rally. Now, remember, this bull flag pattern still has far to go. We've drawn this on this show, and you can see we are extending to all-time highs. We're very close to all-time highs. The reason why this is so important is because if we break all-time highs this week, you're just going to see continuation because no one's going to want to stand in the way, and everybody's going to want to get on knowing that liquidity is really poor. So, if we break this 16,700 level, there's a good chance we're going to trade into a 17 handle, on the NASDAQ 100. So just keep that in mind. Take a look at the Russell 2000. What a reversal in the Russell 2000, right back up towards range highs. All right. Think about that. Not only do you have a recovery in the NASDAQ hitting all-time highs or near all-time highs, the S&P, which is not too far away from all-time highs. I mean, what's going to happen with the Russell 2000? Why couldn't we get an expansion and back up towards 2100, this previous support, once again? That could very easily happen from current levels at the end of the year. So, some really key markets are making a move. Now, one of the markets I'd be really careful about, and I blogged about it this week, would be the German DAX. And the reason why I say that is the hawkishness of the ECB kind of put a kibosh on the DAX for now. I say for now because if U.S. equity markets continue to rally to all-time highs, what you might see in the German DAX is you might see it dip to the breakout point and then back up again, right? Because it's one of those the tide of the U.S. equity markets just might carry through some of these European exchanges as well. Now, obviously, and I need to say this just because I know we're all going to be watching it. The Nikkei could also be drug higher as well, especially if the BOJ is not doesn't really do anything or give us any new information this week. But again, if U.S. equities continue to grind higher, Why can't the Nikkei head back up towards its highs, and same with the German DAX? Okay. Another thing that we should look at really quick. Well, there's actually two things we should look at. Take a look at crude oil. One of the things about crude, and I talked about crude oil earlier this last week with Chris Weston from the Trade-Off Show. It was my play of the day when we were down here around the 68.50 level. Is why won't crude go higher? I mean, you know, the Fed basically gave us a green light to be buying everything, being as dovish as he was. Now, obviously, we're going to get some more information as we go into the beginning of this next year. But inflation pressures are probably going to continue to stay elevated because of the loosening financial conditions that the Fed Chairman Powell so conveniently gave all of us this last week. With that being said, crude oil probably will make it back up towards the 200 DMA before we find, you know, some further direction. So I would be looking at crude oil and think about how that factors into other trades that you might be in, whether it's the Norwegian krona, whether it's the Canadian currency or whatnot. Now, I am going to go over gold, but before I do that, I just need to say this. Guys, gals, if you haven't tried out Forex Analytics, make sure you do so. It's only $1 for 10 days. Make sure you check out the Trader Funding Program, especially going into a new year. Going into a new year, I know you all have, you know, aspirations and goals. Well, we are here to help you achieve those goals. If you want to learn how to trade a larger trading account because you don't have access to a $50,000 account, you don't have access to a $250,000 account or $1 million account, check out the Trader Funding Program and think about taking an assessment in our program. You should be thinking about it. One of our youngest team members has passed 2 assessments and is trading 2 live trading accounts through the Trader Funding Program, and he's a full-time student in college, and he does some of our social media work. You know, he's doing it, and so you need to learn more about it as well. So check out the Trader Funding Program. All right. Now, I also need to say, if you like these videos and you think they're good in preparing you for this next week or for your week ahead, make sure you give our team a thumbs up. It is the weekend, and we are here for you. So please help what we're doing by liking the video, subscribing to the channel. If you see us on social media, you see Forex Analytics on Twitter or X, tweet this video out. Please retweet it. Please like it. We'd appreciate that. All right, those are all free things to do. So thank you. All right, I want to talk a little bit about gold, because gold, this is one that moved quite aggressively following the FOMC. Now, we found support at the 50. It's pretty simple here. The 50% retracement and the 50 DMA, right? That's it. So what does that mean? Well, that means while we're above 1975, don't be bearish. If it gets below 1975, and definitely if it starts getting below the 200 DMA, you're probably going to see some sellers really step in the market. The flip side is, you see all these highs up here? Yeah, that one, and this one. Those are all the previous all-time highs. That means it's going to matter as we get back to it. So any move back up towards 2080 in the gold market, if you're bullish, you just need to be really careful, because obviously we've failed up here. I still think it's a longer-term failed breakout. That means that the risk, I still think, is to the downside, but that doesn't mean that we can't get some flip-flopping in both directions between now and then. All right, let's go into review, talk about, this is the point in the video where we're going to talk a little bit about, some of the setups that we had last week. So the first one, which I happen to be probably my most aggressive position right now, it is actually, as we go into the end of the year, is the Aussie Kiwi. I was looking for it long. I was trading it long all last week. I actually exited it midway through the week as we got here towards the 200 DMA. I already reestablished my long, and I'm still looking for a move above the 200 DMA and to trade back up towards triangle resistance. I think there's going to be a divergence between the RBA and the RBNZ this year, and that's gonna lend its hand to a stronger Aussie Kiwi going into next year. With that being said, we do have the RBA meeting minutes, so just be careful if you're still trading it on the long side here. We also talked about the US dollar Mexican peso if it got above the 200 DMA. It obviously never got above the 200 DMA. I bought the dollar Mexican peso at like 17.25 or 17.27, somewhere around there, and I sold it midweek for a little bit of a loss at like 17.20 as it dropped back here following Mexico. But what I was really trying to do is prepare for a move above the 200 DMA in case we got that following the Mexico. Didn't happen, so I just basically flatted the trade, took a very minor loss, and moved along. And then the last thing we did talk about last week was short dollar yen. Hopefully some of you guys took advantage of that. That was a really nice setup from the 146 level. We just basically hit the underside of that channel and rolled right over. So hopefully you all took advantage of it. Now take a look at the dollar yen. We are making lower lows and lower highs. Be respectful of that as we go into the BOJ this week. So what are my setups for this week? Well, I'm going to say this. As long as the S&P remains above that 4,600, 46, you'll see it here. As long as we are above the 46, well, depends if you're looking at futures or if you're looking at a CFD. Depends, so just look at the horizontal resistance, the previous highs of July of this year. As long as we stay above that, I think you have to buy dips to that. So we might get a dip this week towards the 46.20 level, but I think you want to use that as an opportunity to be on the long side. The other opportunity is going to be, again, with the dollar Mexican peso, because I think if the dollar Mexican peso makes it back down to 17.05, I think you can still play it on the long side down there. But you have to be patient. Wait for that level to get there before it does. Now, like I mentioned earlier, my last one is going to be the sterling yen. I mentioned earlier that we do have a lot of UK data this week, right? We have not only CPI data, which comes in on Tuesday. Is that it? No, Wednesday is CPI. But also we have UK retail sales on Friday morning. So watch the sterling, because if we drop below the 200 DMA, it is bearish. Because we're going to be dropping through channel support, and we're going to be making lower lows below that level. So a drop below the 200 DMA becomes bearish for pound yen. And that is going to be the last setup for this week. So guys and gals, I hope you really enjoy these videos. If you do, please give them a big thumbs up. I want to thank you for being with us. Next weekend, we will not be having a week ahead video because it'll be Christmas Eve, and I'm going to be spending it with my family, and so will the rest of our team. So I'll see you back here in 2 weeks. I hope you all have a great holiday, and thanks for being with us all year. I'll see you soon. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.